G'day listeners and welcome to another episode of the Scouting Australia podcast, powered by Australian Property Scout, buyers agency. I'm your host, Sammy Gordon, and today, guys, we are in for a very special episode. There's been a lot of talk and a lot of chatter around lately around stock levels in Australia and them being nationally down, year on year. We had a good chat about a big dissection of it last week, in fact, on the end of financial year recap. So a lot of people were asking us to explain a bit more why are stock levels so tight. And so I thought I'd get in one of the big heavy hitters here at APS. He's got a bachelor's in property economics, and he's also one of the head. He is the head. No, you're not. I'm head bloody strategist. You're senior strategist.
I got the promotion, Jimmy.
I've been pushing for you for a while.
Right.
You've got him. You're on his tail.
Well, that's a start again. I was going. No, just joking. So I got a senior strategist here, obviously big Lukey. Mate, I'm looking forward to having you on dissecting a bit of this here. We've got Jimmy here as well. I think he's just for laughs, like just to laugh at, because he doesn't actually bring much to the table.
I was going to say,
Jimmy also, mate, welcome.
Thank you. I was going to say more for the good looks for the crew, but whatever you want to choose. But I'm just curious, Lukey, does anyone love stats more than you? Because I know you love the numbers, Sammy boy.
Yes.
But Lukey, you love the numbers, don't you?
Yeah, a bit of a data nerd. I tell people that on strategy calls all the time and they laugh at me, but
someone has to do it, right? Someone has to do it.
Everyone else is normally too busy laughing at you.
No, but this is all about the numbers, right?
100%,
when you're talking
100%.
about stock, and of course, Lukey, the reason why Lukey is the senior strategist. For those out there, Lukey, you do a lot of the strategy calls for clients. You do the follow-up calls after, when people settle. So a lot of people ask me, who is this Lukey? So you do a lot in the business, which is awesome.
yeah, Sam keeps me busy. He's always giving me stuff to do. So I speak to clients pretty much all day, every day. So people will have my take on different things. Some people love it, and I spend over an hour talking to people, and they go, "Oh, what's the economy doing?" And then I bore them to tears, and they probably regret asking. But
you actually get sent them a call, and they're dead. They've killed themselves. I'm fucking bored.
they go, "No, I'm done."
So when we talk about stock, guys, I know a lot of our listeners have been asking about this, and I thought, a good place to start. I know we've all got a bit of notes, but is it possible
there's a lot to unpack around this because the stock levels have been like gradually getting tighter and tighter. People have been talking about a housing crisis for years, right? But I don't think it's actually eventuated and started to really come to fruition until 2020, 2021. It really started to kick off, and I think now we're literally in this spot where we are in a national housing shortage in terms of stock coming to market. And so I think it's a great way. We've all got notes because there's so many different points around this as well. There's not just like one reason and one factor for it. There are multiple layers to this onion essentially that we're going to be peeling back. That is stock levels. So I think it's going to be good. I'm really looking forward to, I guess, peeling this back and diving deep into the data as the big data nerd here would say, in and around all things stock in Australian property right now.
So can we just start by going back to real basics? And when we're talking about stock levels, Lukey, just give us a real nuts and bolts, just set the foundation at the start. Are we talking rent? Are we talking properties for sale? What are we talking?
It actually pretty much covers everything. So houses, units, townhouses, stock is basically properties being sold, transferring between vendors, etc. And it also covers the rental market too. So people stock in terms of rental stock, people needing properties to rent, and that stock is taken quite quickly at the moment because the stock is so low. So
the key thing we're really talking about dissecting today is the sales stocks. So sales volumes and sales stocks are the big things, obviously the big precursor in terms of what this is all about, because essentially that's what's holding the floor under the housing market. The tight rental market is crucial as well, but obviously the stock on market really comes down to a sales perspective. Your vacancy rate is really your rental stock, but talking about the stock levels and how tight they are right now, and to break down some numbers, I know Lukey, you and I were chatting about this earlier offline. There's barely any capital city that isn't down by more than 20% year on year from 12 months ago. Some of them are over 25% stock on market down. And like those numbers are like as far as I've been investing for, which has been almost a decade and a half now, never seen levels get anywhere near it before. You put some of the cities into the equations in boom periods, they're normally sitting, around, they normally get under 20 days on market. For a data point there as to a market in boom. Once a market drops below 30 days, it's pretty tight. Below 20 days is exceptionally tight. We're seeing some markets now that are getting under like 10 days, under 5 days on market for sales. That's how quick it turns to sell. And so super, super tight stock, that's a massive precursor to those days on market getting so tight.
So if you're looking to sell, you can generally.
It's not a bad time, man. And if it's a market that's had a great run and the long-term picture isn't really to hold this thing, like it's a great growth property, but the cash flows aren't going to be there. And as interest rates have risen and keep rising as we're in at the moment, if that's going to make you bleed over time as well, it could be a good time to look to sell while stock is quite tight. Because in 6 to 12 months' time, if 5% lift in stock will plateau. In my opinion, will go close enough to easing the market. A 10% lift can cause a bit of a decline. So there are some markets that I think will be open to that down the track as well.
All right. So Lukey, do you want to kick us off with some of your key points?
Hit us with some data points, mate. Data.
So there's actually been a lot of things that happened recently. Probably something I wanted to touch on first was federal government funding. So a few days ago, came out and said $2 billion one-off payment, investment, they called it, into social housing. So that is basically a drop in the ocean in terms of what is needed to actually fix the problem.
2 billion is nothing.
2 billion is actually nothing across Australia. So that's obviously needs to be split across all the states. And by the time that money actually funnels through and actually hits the market and starts to be utilized, the problem's actually far worse than it was when they agreed to that number. So there's also another $10 billion fund. It's called the Housing Future Fund. So $10 billion. It's currently stuck in Senate. It needs coalition or Green support. And yeah, they're basically saying we need more than what you're proposing, which I'm in agreement with, if I'm honest. The funds that they're proposing doesn't actually fix the problem. It doesn't even half fix the problem. It's a bit of a Band-Aid.
So they're just throwing cash at it. But what is that cash actually going to filter through to do?
Ideally, create housing stock and new houses for social housing. Basically, people that are living below a certain income are eligible for social housing.
But you need to qualify for that too, right? Social housing. It's not as if that's just going to apply.
But there's a huge wait list, Jimmy. Like the wait list isn't tiny.
Housing.
Yeah, it's massive.
28 months. We were talking about this the other day.
True.
28 months.
28 months.
Yeah, it's crazy. It's absolutely crazy.
So over 2 years.
Yeah. And so like this, by the time it won't even catch up because they also sell off housing stock as well, like social housing stock in older areas, established areas that was social housing in the 70s and 80s. They sell that stuff off as they go as well. They kind of try and like decentralize they call it like almost like little slums, right? The clusters of housing commission. They sell that stuff off over time as well. And I've actually bought a few of them direct down that avenue too. So yeah, man, like it's a huge waiting list. And it's just gonna compound as well. It's really, yeah, like we were saying before, $2 billion across the whole country. It's a drop in the ocean. It's nowhere near enough.
And why aren't builders just building? For people out there listening, they just go like, well, why can't we just build more houses?
That's a very tricky question. There's a lot of, and that was pretty much leading into my second point. So there's a projected shortage of roughly 106,000 homes by 2027. So it's only 4 years off. 106,000 homes is a lot in comparison to the stock actually coming to market.
Is that based on projected people coming into the country or just based on current population?
Current population needs.
So it's a big problem.
Yeah. Look, I think I guess the thing to kind of dissect here as well, I think probably what we need to do as a first thing is actually going back as to like why are we in this housing shortage? Why are we in this deficit? Because you're talking now about the solutions, but how about like how we got there in the first place, right? So like I think the biggest thing, I'll let you jump in with Lukey with your thoughts around it as well, but I reckon, man, the biggest thing that kind of was the precursor to this was in 2020 and 2021. Yeah, the world was crying out that the media was crying out the world was going to end. There's going to be this huge housing crash. So a lot of people went to market and sold. Combine that with closed borders, there's a lot of first home buyers that could never travel. They couldn't travel. So all these guys that every year they went for their trip or they'd been saving up for a big Europe trip or something like that, a big America trip, all these different things. All of a sudden they couldn't travel. Housing was also at this time incredibly cheap. And there was a lot of affordability in most markets. So what you found was a lot of people who had like held on for a long time, or were just super uncertain on the market, and they were just like, no, you know what? Like we're cashing out of these things. We're opting out. There's a lot of reform going around, a lot of changes. Tenancy Acts always being updated. There's a lot of things that were very unfavorable to investors, especially people that held on for a long time. And so really what happened was a lot of investors go out and sell. So there's all this rental stock that starts getting eaten up. And who's it get eaten up by? It gets eaten up by these first home buyers who are no longer traveling, and all of a sudden they're cashed up and they got some cash. There's no car stock coming in, so they can't just go blow it on a new car. So what they're doing is they're going out and buying houses. Now, what was happening is you're turning all these houses where these people were living at home, these kids were living at home, and every year they were just going and traveling, and they were milking, banker mum and dad, and they were milking, living at home with the parents. Now, all of a sudden, these households that were maybe a household of 5 get split up into a household of 3, and maybe the parents stay there with a kid, and then 2 of the kids move out and buy their own homes. So all of a sudden, you've got a household you've got one household then turns into 3. And you're eating up all that rental stock at the same time. So it just created this mass deficiency over like a 12, 18, 24-month window, because all the incentives were being pulled for investors. There was a few very, crazy things sort of going on there. Even in 2019, actually probably exacerbated all the way back then, Labor was a sure foot to get in. The reason Labor didn't get in is because, in my honest opinion here, is because they had this huge change, the big overhaul. They're going to scrap negative gearing. These investors that have held on for 10, 15 years, that's their lifeline to hold on, and they're going to lose it. Like a lot of guys sold out then, and it just kept exacerbating. And so a lot of this cheaper housing stock started getting eaten up by these first home buyers getting in and going and buying this stuff. And so that really caused a massive shortage, because it's eaten up a huge amount of rental stock. People have bought in super cheap. They've locked in super low fixed interest rates. Their debt level is actually very low on those properties because they bought them in before the boom, or at the start of the boom, or in the middle of the boom. So their debt exposure isn't all that much. So they're not selling. They have no reason to sell. They're not going to sell. They're not going to move back in with mum and dad unless things get to a crazy level. So there's no real reason for these people to be selling and selling out. So they've driven all this stock level down. And that's where I think it really drums back to the fact of even people at the moment who are stressed or getting to a stress point, because interest rates have risen so far, their affordability has gone down so much. They no longer can borrow anywhere near the same amount of money. So if they sell it, what are they downgrading to? They can't afford to buy anymore in anything they'd want. So then they have to look to rent. But when they look to rent, rents have risen so much because of the stock deficiency and the vacancy rates being so low. It costs more to rent in their same area than it does to still own and hold this property. So they're caught in this catch-22 situation of what do we do right now? And so this is where we're seeing, this is where it will get to an awkward point. Where can they still hold on? And this is where I think a lot of people are going to hang on as long as they can. And interest rates, because we know it's been on a very sharp trajectory. And once the economy gets into this stall position, because what's going to happen is those people, how do you afford to live? And how do you afford to hold the home? So you stop spending. So discretionary spending goes down, and the government gets exactly what they want. The RBA gets exactly what they want. Inflation stops rising because people stop spending money. They stop spending money, people stop going out. They're trying to drive up the unemployment. So they're trying to get that. We're at record lows for that number. They're trying to drive that up. They're trying to stop people spending and bring all this back. And yeah, I know I kind of went in a big circle, a big trajectory there, but that's essentially like, I think why so much stock got eaten up and why there's no real reason for those people to sell. And now, like Lukey, we covered off last week or the week before, whenever it was, about the population numbers and how much that's growing every year. Just from an immigration perspective, we're talking about 350, 400,000 people coming in a year, and they're talking about ramping it. Where do they all go? What are they all eating up? They're just smashing all the housing stock. And so you combine that with the fact that it is also now extremely more expensive to build, and because build prices have gone up so much and the interest rates are so much higher. So even just to hold that while you're building and to live or rent somewhere else as well, most people can no longer afford to do it. So it's just slowed everything down, like the building industry as well, been massively slowed down. And that's why you said, why don't builders just keep building? They're not going to build something if someone's not paying them to build it. You need someone to help to pay them to do it. And so this is where, man, we're in a really, really tricky predicament. And I think I called this a few weeks ago as well. Like, this is not going to be solved in 6 months, in 12 months. This is a housing stock shortage that is literally going to stay there for a while. Some cities may ease sooner. I think your big cities with more debt exposure, like that, again, that example we gave where in Sydney, 78 suburbs in a 12-month window went from $1 million plus suburbs to sub $1 million suburbs, right? I think a lot of those markets will start to ease back a bit as people have to sell and move out. And it probably will put more pressure on fringe areas as people can get cheaper rents and cheaper housing out there as they kind of downgrade and move down from that. So I think because of this huge interest rate run we've had, we're going to see a people willing to go further out to be able to afford to live again, because it's just been on such a wild run.
I think that point you made there that obviously got glossed over a little bit, but people can't afford to hold the cost of building and rent and pay either rent or pay their existing mortgage while paying.
Because what are you going to do? Live in a fucking tent out the back while it gets built?
Like progress draws, they're quite expensive, and the amount of interest you're paying on that. And generally, construction loans, a lot of them are interest only during construction, but you still got a large holding cost that's being added to the cost of living that's already on the increase. So that's a massive point that obviously I just want to expand on.
100%, especially if they bought the land at an overinflated price. There may be a lot of people that it actually is easier and cheaper for them to cash out and to sell that block at a loss than it is to try and build it and carry the debt. Because a lot of the time they no longer service to carry that debt. And that's why a lot of builders are struggling, because there's no one building, because we're in that tricky point at the moment where interest rates have gone up so much. People have been trying to make it work, but they can't make it work. And now it's getting to that point of, okay, well now I think we might start to see a bit of land coming back to market. People just selling it to clear. And all right, even if they take a 50K haircut and the equity, the cash they put into the deal, even if they lose it, but they don't have to hold that second mortgage anymore. And I think and again, this is probably where first home buyers will come back in that are living at home with mum and dad. They can buy that land a bit cheaper, and they can probably still afford to build while they're living at home. But other people outside trying to do it externally, living and paying rent or paying a mortgage somewhere else, and you try and pay that second one, very, very hard to do. Unless you put maybe like a gypsy caravan out the back and get that dual income. I don't know.
That's a really good point, though. I think that just summarizes why you're seeing a lot of builders going bust, right?
Yes.
If they're not getting any building approvals, if people aren't wanting to buy any stock, all their overheads, is that why you're seeing the news?
It's a combination. So that is stopping new sales going through at high prices, right? Which is what they need. The issue is they signed contracts 6, 12, 18 months ago. We covered this a while ago, Lukey, on inflation versus interest rates or whichever one it was. And what they do is they sign a build contract. By the time they finally got the materials and are able to start, they're actually losing on that build price. So let's say they signed at 300,000 and they were building it at 250, so they're making 50K, right? Now all of a sudden it's 12 months down the track, and that house costs them 350 to build. They've only sold it at 300,000. What do?
They were paying people to walk away.
Yeah,
there was a period there where they were offering people cash to walk away because it was cheaper to pay cash up front than lose 50 grand. I'll pay you 10 grand cash instead of losing 50.
Yeah. Give you your deposit back and 10 grand cash, and we call it quits, you know? And that's literally what was happening. So this is where it's literally like the perfect storm we've walked into and we're working with at the moment, as to why we're so tight right now. And I think why it's just getting tighter and tighter. Because a lot of the time, like that new housing stock, it soaks up so many transactions, you know? And that's just not going through anymore. It's not going through the same volume that it was even a couple of years ago.
And it's fair to say, new home buyers, if you're living with mum and dad, and you'd be spooked right now, wouldn't you, with interest rates and being fearful of actually getting into the market, your first deal?
Yeah, 100%. I think that's why also they and especially because build prices have been going up so much, but that's why there's always so many grants around it. You know, you normally get a stamp duty concession, you normally get a builder's boost, different things. And I think that will come back in, especially as more builders go under. I think there'll be a bit of support from the government around that as well.
I think that's a key point there, what you just said, though. Builders collapsing and falling over would spook a lot of first-time buyers, and people that have bought a number of times would be spooked by that too. Builders collapsing and also the delay in construction.
Yeah.
They go and say, I saw it on the sign on the way back from the Gold Coast the other day. We'll build a house in 16 weeks. I don't know where you can do that because it's just not happening.
Was that a Yatla pie shop? Was there some fella holding a sign out the front? Pay me 10 grand, I'll build your house.
I promise you, I'll give you a pie and I'll build it for you.
Extra sauce, or you got to bring your own BYO sauce?
BYO sauce.
Oh, what a dog.
It's not a turnkey package, that's for sure.
No lawn and sauce included.
Those delays are massive, you know, like if you're looking at an initial 4-month contract for a build and that blows out to 6 months, 8 months, 12 months, and in a high interest rate environment where you're paying 7% on that construction while it's being sort of built, you're looking at a large increase in your sort of holding costs. And some people might have budgeted for an X amount. They go, oh, builders are going under, construction delays are sort of blowing out. Oh, that's going to cost me 20 grand. I might not even get a house because the builder might fall over. And that would spook a lot of people.
So what other reasons then, Sammy, would you say that the stock levels are so tight? Is there anything else that we haven't I mean, you mentioned a whole bunch of different facets. There was a heaps of great value there, but is there anything else that jumps
out? I think like your big ones obviously being like the mass exodus of a lot of people going out, being bought up, a lot of stock being bought up by people that were multi-household people, and now just, you know, that turning into single sort of people as well. That was a big one.
Because because COVID as well, don't forget. I mean, people were cooped in together. So people were dying to get out of the house to have your own space.
You know what a huge one is, man? And you see this every time something big happens, like COVID, right? Like it was like when COVID COVID happened, people who needed to sell sold. The people who didn't need to sell, they just held on. Because people, when something big happens, like interest rates or like the economy and inflation, all the rest of the bullshit, when people don't know what to do, they just hold. They don't take action, right? So they do nothing. And when people do nothing, that includes going to market. So if people are like, well, what's the point of actually, what do I get out of selling? Unless it's cashing out and clearing that debt, that's the only reason a lot of the time people at the moment are trying to get out, or people that have made a windfall and are just trying to cash out of markets as well. But for the most part, like people aren't going to market with the same reasons that they have always had. Because most of the time, most homeowners will be exiting a house to upgrade. But if you bought a house 2 years ago and got 3% interest rate, and now you're at 6-7% or whatever, you can't buy it, you can't upgrade. So like that normal transition, that normal trajectory doesn't happen. But I always see it when there's a lot of change, people sit in their hands and they do nothing because they're scared to make change, they're scared to make the wrong decision, and then they just want to wait it out and see what happens.
Wouldn't you also say that's the last thing to go for most people though? Like you can cut back. Yeah, I mean, if you're going to pass on something. Yeah. Cut out going out. You cut out all the fancy stuff. Sell the car or do whatever. The last thing you want to do is your biggest asset.
Australians are very resilient too. They will hold on, and that will be the last thing to go.
Yeah.
And a lot of brokers, they assume people pay their mortgage first. There's a lot of discretionary spending that goes into servicing calcs. But at the end of the day, they go, do they have enough money to pay the mortgage? Because that's all they're concerned about at the end of the day.
You know, a question that you asked before, Jimmy. I think you asked it to Lukey, but it wasn't quite the right question, because what you said is like, why don't builders just keep building, right? What I'd be asking is, like, I think the right question there is, why aren't developers still developing, right? So builders build because someone pays them a contract. Developers build to sell an end product. And if you look at this, it's almost the exact same scenario that we're talking about here. The reason developers aren't going to market and they're not building and completing projects that they've had is because most of the time, sale prices have come back. Costs of holding costs have increased substantially, especially if they were doing projections 12, 24 months ago when the RBA was saying they won't raise rates until 2024, and now we're up 4% in 2 years before that was supposed to happen. You combine all that, so you got holding costs have increased, sale prices have decreased, so they can't sell it for as much, and the cost of building has substantially increased. They're losing at every turn. So it's a trifecta the wrong way. They're literally losing on a triple whammy here. So for them to develop, they're going to lose money. So what actual reason do they have to go to market and develop? They don't. So they shelve plans and they bin it and they park it. And I'm going to revisit this in 12, 24 months. When interest rates start to come back and market starts to recover, I'll do it then. Again, additional pressure on the housing market because a product that was going to come to market is no longer. So even the DA and all these dwellings that have been approved to come to market, no worries, they've been approved. Doesn't mean they're going to get built. For a developer, the dollars have to make sense. And if they don't, they're not going to build unless some government stimulus comes in to try and help them or give them some, something to try and make them build. But at the end of the day, if it's not going to make money, they're not going to build it.
Are you talking about developers, big, small projects, or big estate developers, or everything?
Everything, bro. So everything. So if land's, the example I gave before, people may be taking a $50K haircut to get out of a deal. Yeah. If that's happening, I guarantee you the developers are selling at a discount to try and clear stock. Townhouses, down. You know what I mean? Like, affects townhouses, affects units, affects everything.
So on every scale, every developer, whether you're doing a massive estate or you're trying to do a townhouse development, it's going to affect
everything that's got anything to do with the building industry at the moment has increased. Renos, builds, developments, everything has increased, right?
And because
holding costs have increased. So when everything increases and your sale price goes down, there is no reason to build. You would be an idiot to do it.
And that uncertainty too would be pretty hard to take on. Like you don't know what's going to happen. If interest rates go up an extra, I mean, who knows, right? So that uncertainty is paralyzing for a lot of people too, right?
It pretty much is the perfect storm though. What Sam was saying about everything is stacked against them, making it harder to develop and to bring new stock to market. You then go and add all the community groups that are pushing back on developers. They bring something to market, go, perfect, we're going to do all this stuff, we're going to bring this to market, and they get pushed back against and they go a year or two fighting through the course. You get all the bad things that are happening against them at the moment. You add that, they go, nah, we'll just
shelve it. No worries.
We'll worry about this in 3 years' time, and by then they may want that new stock in that market.
And that's where I think, that's why I say, when I genuinely say, I reckon we've got 3 years left of this as a minimum, because if all these guys are shelving stuff, they're not going to bring it back until holding costs come down, build prices stabilize, and sales prices either stabilize or go up. I've said this to you many times because you've always said to me, man, why don't we go do some developments? You did a couple of developments, you did really well. It's like, yeah, no worries. I did them when the market was stable. Because when they're stable, you know what it's going to cost you? You know what you can sell it for. You know, and that's everything when it comes to developing.
Yeah,
you know what it costs you?
The outcome. You're
exactly.
Controlling the outcome.
You know what it's going to cost you. You know what you can sell it for. That means you know your profit margin. Until that's a stable market or back in our in a developer's favor, they're not going to be coming to market. You'll be a massive shortage. You know, and yeah, new stock will be taking ages to come through.
So is it fair to say I think we've got a pretty good grasp as to why stock levels or why those factors are affecting stock levels. So let's bring it a bit closer to our listeners out there and thinking about, so what happens with stock levels being so tight? What's actually happening in the current markets that we're actually buying, or just real estate in general, for the everyday investor?
So this is where I was saying earlier, like in terms of nationally, you know, stock on stock is down about 20 to 25% in capital cities. Most of the areas where we operate in, some of them, like the ones I gave the example around earlier, that are a bit earlier in the cycle, that we're operating in a kind of 25 to 30% stock on stock, like year on year down on stock. Some of the other markets are like 60 to 70% down stock year on year from this time last year. So like astronomically tight levels, like ridiculously tight levels. So, you know, I know we're going to be doing a podcast soon on the importance of off markets and really how to navigate this market. A lot of people have been asking us this question around like, why is stock so tight? You know, we've always been asked over time as well in terms of off markets and everything as well. So I think we'll go into that in another episode and detail that. But yeah, man, it's like with stock levels that tight, it's hence the conversation a few weeks ago about essentially we're having to change our offer. When you're down 80% on stock and people have no real reason to sell at a heavy discount, it's such a minority of the market that will actually sell at that pricing now. So
which I think
very interesting.
You said the reason why there's a flooring in pricing. So people who are sitting out there on the sidelines just thinking, I'm going to wait and grab an absolute steal of a deal. Well, if there's low stock, that's not going to put any pressure on prices to fall.
And that's why it's always market dependent. You know, Australia is a huge market with so many sub markets, and like, you know, people always say, I'm gonna wait till Arsefield's out of Sydney. You know, people have bargains. It's like, man, I'm gonna wait for Sydney in 5 years when everything's plateaued out and chilled out and the market's back to a stable level, and then I'm gonna go hunting. Then I'm gonna go scouting and picking up deals at that time when the market's dead. You're trying to pick it up when stock's tight. It's like, especially if interest rates still got room to climb, or if this stays for a while as well, there's still more for that market to come back. There's other markets you can make substantially more money in right now than trying to go buy into that market.
Okay. Anything else that you want to say on that point?
Sam covered that point. I was going to.
So, can we talk about immigration then? We've talked about a lot of different things, but in terms of the specific numbers of immigration, did we cover that?
Yeah, so
we covered that last week. Yeah,
last week or the week before.
Just to recap for people.
There's about 400,000 skilled migrants coming to Australia leading up to December 2022. So the forecast is for that to increase year on year for the next sort of 3 years. We have a massive sort of skilled labour shortage in Australia. We talked about the blueberry example, but that's across the board. It's not just blueberries. It's not just restaurants. It's across the board. We're lacking in engineers, nurses, people in skilled positions that we need. And we need to open up our borders to those sort of people to fill that gap. And they're coming in, they're renting for generally 2 years, and they like the country, they like the lifestyle, they like the jobs, they probably get paid probably more than what they were depending on where they're coming from. So they end up staying and buying a house, which adds to the problem long term as well.
So it's a double-edged sword for the government because they're trying to solve this labour shortage. But by bringing all these people in a housing market, that's
you know what's the most counterintuitive thing they did as well. So the government and the RBA are almost working against each other at the moment, right? So the RBA is trying to drop inflation, so they're jacking up interest rates, right? But then the government are like, well, we need heaps of skilled migrants and we need all this stuff, so we're going to open up the population. We're going to give 24, 48-hour visas because we want to get as many people in as we can in working and then spending more. So the RBA is, well, f you, we'll do another raise, and then the RBA, the government will be like, all right, we'll put up the minimum wage. We'll up you on that one. So they put up the minimum wage trying to push wage increase, and the RBA are like, well, we've got to do another one because because they're constantly trying to bring that back in, and it's almost like counter-cyclically working against each other because the government are trying to keep things moving, but ultimately it does need to be stalled on that end. But it's that's a crazy environment we're in at the moment, where literally those two are essentially working against each other, you know.
But that's what they get measured on. The government gets measured on how far they advanced the economy, how far they advanced the country while they were in office.
Yeah.
If they're going backwards and stagnating everything, they look bad.
You know the main issue as well with the population. Like if they don't let in more population, right now, like the cost of labor is so high right now. It's unbelievable high is what I know that people are out there getting paid. But even in terms of hospitality and trades and laborers on trade sites and all that sort of thing, the money they're getting is just crazy at the moment compared to anything they've ever gotten before. And so the only way to stop that still increasing and that crazy trajectory is to put more people in there so more roles are filled. So there's less, you know what I mean? So there's less essentially demand for a singular person for multiple roles sort of thing. So supply and demand, right? But on a labor shortage side. So I think that's why they're trying to flood a huge influx of people in.
Which is quite interesting because hasn't wages been flat for a very long time and the government's been trying to get wages growth up? So they're actually doing the opposite.
But the tricky thing is that like it's supposed to essentially grow. The idea is they want to keep it in line with inflation. They want to keep the band, the wages growth band in line with inflation. Hence why like a lot of public servants get their 3, 4, 5% every year incremental increases. It keeps them feeling wealthier. And as the inflation band picks up as well. But mate, it's a tricky beast, Lukey?
I think what we need to look at as well is it's not an easy fix. There's a lot of things that are adding to the problem.
Pressure,
And the pressure isn't coming from one single source that you can go and go, perfect, we fixed it.
Yes.
It's all over. It's coming from 5, 10, 15, 20 different places that it's very hard to go and fix it immediately. So I think it is a long-term problem. It's not something that I very much see ending anytime soon. I think it's something that we need to adapt to and find the opportunity in.
Yeah.
It's
And
it is 100% a time of opportunity.
Well, that's what I was going to say.
When there's market pressures like this, and I honestly feel like we're going to have them at a pretty substantial level for the next 2-3 years. When you've got that, that is where do I target to make the maximum that I can out of the current environment? Where do I avoid? Like the plague, and then where do I look at and go, all right, there is some hectic opportunity here because of X, Y, and Z factor, improving economy at a super low base, a lot of things pushing it in the right way from all those perspectives as well. There are the opportunities out there to be super bullish on. Obviously, there's a market you got to be wary of, but there are a good number of markets out there that are going to perform exceptionally well in the next, I guarantee you, and there's going to be markets that double or more in the next 3 years, no doubt.
So for people out there that are listening, they're hearing all this. There's obviously a lot of complexity with stock levels. We're talking about government. We're talking about a lot of different facets that are contributing to this. Can you strip it down for people? You said opportunity, but what is the biggest thing that people can do to actually improve their situation? Understanding that stock levels are so tight, understanding the challenges and the headways that are going to be there. Is it a mindset thing? Is it a practicality thing? Is it what is it for the everyday person listening to the podcast to try and capitalize? What should they be doing?
I honestly believe if you're out there trying to source yourself at the moment, in a good location, man, you got no chance. I think last month, in the month of May, I can't remember what the month of June was, but May was 88% of what we did was off market. 88%. was like a couple of deals that were on market. Everything else was off market. And what we're actually seeing is a lot of people paying silly money off market, not understanding true market value. And so, to try and go out there and compete and not know what other things are selling at, and then to try and compete, it's almost impossible. And like Morgs gave the example a couple of weeks ago about, the online auction sort of thing that she went in on. She'd subbed a 415 offer. We thought market value was about 435, 440. I saw for almost 470 in 40 because they just let everyone bid themselves out till they're crazy. But we were at a 415 and it sold at 468, I think it was. So it's just if you honestly want to take advantage, if you employ a professional, someone who is exceptionally good at picking markets, that's the first thing. You want to make sure even if you're trying to do this yourself, let's say you're trying to do this yourself both ways, you need to put a lot of time into making sure you're picking the correct market. Okay, a lot of time into that. You get it wrong, this can go very much the other way over the next couple of years. If you get this right, it can go very, very strong trajectory for you. And then it's just so key to be able to buy the right deal and understand true market value right now, because it's almost impossible out there. If you're the average Joe, unless you're tracking the market for a solid 3 to 6 month window and you're knowing what things are selling for, it's very, very hard to kind of keep on top of it because there's so little stock to use as comparables. And so having access to the off markets and obviously being able to utilize that and understanding what is also selling off market is absolutely crucial.
But on that as well, the amount of stock you actually can find on realestate.com and Domain is actually such a small percentage of the market.
Yeah, it's very true.
There's so many transactions every single day that never actually hit
well, you look at
the market.
I mean, the stock stock levels, right, are what's advertised. So that's what's advertised, right? Australia-wide. That's stock levels. You think about the number I just gave, 88% of what we bought in the month of May was off-market. It's like how many transactions are going on behind closed doors as well, and like obviously the level and the quality of what we do is very high as well. So imagine the amount that's going on that aren't high, that aren't super high quality as well. So,
but on that, like with people trying to source themselves, obviously a lot of people do successfully, but there's also a lot that don't because they're not opening themselves up to the entire market.
Yeah.
It's only a select percentage of people that are advertising. So unless you find on realestate.com or Domain, unless you have like a really good network of agents in the right area.
And why would you if you haven't bought multiple properties as well? You know, it's very, very hard on that front.
Some people would be listening to this and thinking, you know, and the people that love APS and love what you do saying, I get it. I completely get it. Some people listening here would be going, oh, well, he's just spruiking his own buyer's agency and so forth. And so is it fair to say for people, whatever your belief is or what you're looking at, the self-awareness piece, we talk about that a lot, is understanding your own capabilities. And also, I think you've said it really well, the time to put in to doing the deal.
Yeah.
Like if you think in this current environment with all the challenges we've just mentioned, that you're just going to waltz in looking at for an hour after work in bed before you go to sleep on realestate.com thinking you're going to get a banger, you're not. So understand what your skill set is. And if it's not, how much there is to lose.
Mate,
incredible.
We've spoken about this before, but in my own portfolio, like I did well building it before I was a BA, right? I did well and all the rest of sort of stuff. But I look at what I help clients do now and the deals, the quality of the deals and the markets, picking the markets correctly compared to, like how many times have I told you, no, we're getting onto this market. Like, oh, I want to stay here, I want to stay there. I'm like, no.
Is that my voice?
That's a pretty good impersonation, I think. But you know what I mean? Like getting that right is a huge part of it.
Yeah.
And it's, I look at how I went when I was back in the day. I was decent, you know what I mean? I was decent, but compared to how I am now and how the team operates, I'm not, shy to say the fact that I honestly believe we're masters at what we do in this field. We're extremely good at what we do with this and with sourcing deals and with picking the right markets. It's funny because we've never really spoken that much about being like the growth experts and that. Mate, the amount of markets we've gotten into 6-12 months before other investors and other BAs and made the bulk of like, especially the biggest discounts in there as well. But even just picking them before they have their proper run as well, man, it's so important. It's so crucial to the journey to get that part right. And so, yeah, man, like it's one of those things that you get that slightly wrong. That could be 10, 20% in the first 12 months. Like what's that worth to you, you know, 40, 80 grand.
Yeah, so if someone wanted to just say they've listened to this and they go, you know what, I want to do it on my own.
Yeah, go for it.
I know we've talked about it before, but the getting educated piece, and you said, especially in this market.
You know what the key thing to know is? If you're in the same area as me, I guarantee you myself or someone else, that's a BA as well, has passed on that deal before you ever see it. Either whether it's online or even if you fluked a couple of off markets, I guarantee you either myself or someone else has passed on it first because everyone there will have their connections. Everyone will have their people they work with. Everyone, the high-flying sales agents that always go for top dollar, they'll have their idiot BAs that will pay top dollar for everything. And then the ones that just want to cut quick deals easy on the side and have an easy, clean process and, you know, you get relationships and whatnot with, they'll have their BAs that they work with as well. And I guarantee you, anything you get in on that front, it's been passed on. Especially if it's a hot market, it's been passed on. So just take that into account, whether even whatever opportunity you get, you're getting passed on. So, and man, like I also, you know, I understand there's a segment of people out there, and I have no issues with this because that was myself as well when I was younger, you know, going out there and trying to do it. But I can just tell you hand on heart, you're not going to do it as well as we are.
And you mentioned before, you're predicting, especially with the stock levels the way that they are, it's not going to ease for at least a few years.
Yes.
I think you said in certain markets, you're predicting growth of, was it 20 to 30%?
Yeah, 100%.
So if you're out there and you're listening to that and you're trying to justify why you would engage an expert and someone's going to get you a 20 or 30% increase, do the numbers because surely that should be a no-brainer for people. I mean, it is for me.
The realistic thing as well, man, it's like people who want to do it, they're like, man, I never try and bend anyone's arm to come and work with us. I want to work with the people that really want to work with us because they're the people I want to help. I'm not trying to sell anyone into doing anything. I know we can do it better. And if they want to come work with us and have us help them take them to the next level, man, 100%. If you want to have a crack and go do it yourself, go do it yourself.
You know, it's funny you said that before because the reason why I started using a buyer's agent is because when I was looked at, say, Sammy and what he did, and I sort of thought to myself, could I do a better deal than this guy in this market? And like, my main business isn't what he's doing it every day. So what right do I have to think that
You have no rights.
No, but I'm not I would be completely naive to think I'm going to do a better deal than a buyer's agent who is looking at the area every single day, having the relationships. I mean, you got to be realistic as to what is at play here.
100%.
So 100%, I don't want to gloss over it for people, but you should be asking yourself these questions.
This is what, like, I look back at myself when I was investing, and I was good. And I actually wouldn't look at any buyer, because I know all the buyer's agents that were back then now, and I know them now because of us and our work. And none of those, in my opinion, were better than what I could do for myself. But the level of game has changed from that perspective. There's a couple of people out there as well that I think are quite good buyer's agents. In my opinion, the rest are shit. There's a couple that are okay, that are good, and I honestly think we're the best in our areas with what we do. I believe we're the best. I say that wholeheartedly. And I don't say it egotistically. I say it because I see what other people pay and how hard we hold out for deals to get the best price. And I look at it and I look at myself and what I used to buy properties for. And for one, I bought in the wrong areas. I did okay, but I bought too early in certain areas. So I would have bought in a different market and I would have got a much better price than I would have been able to get back in the day. So it's like, you can do it and you can do it well, but can you do it the best? Can you do it better than me?
Also,
can you do it better than APA? I don't think the average Joe can.
But also in a tough market, right? Because some people would say, well, you've been investing and COVID, and I know you built your whole portfolio. Yeah. And I'm just playing devil's advocate here that, through COVID and everyone was doing well.
Ask the question.
But now when interest rates and stock levels and the complexity of the current market, do you feel that over the next 12 months, especially for APS and for the business, this will be, because to succeed when environment's really challenging is going to be a cornerstone for the business to leverage back on? Do you feel that?
What, that we're going to succeed?
No, do you feel that this is more important than when buying in COVID time, when it was pretty much shooting fish in a barrel?
It wasn't shooting fish in a barrel. It wasn't at all. No. Go back to Nick Wilcox's portfolio, mate. Go back and listen to 12 properties in fucking 8 months or whatever the hell it was, or 8 properties in 12 months. And listen to that example in COVID of the other buyer's agent that paid $317,000 for the exact property that I bought the street behind 2 doors down for $280,000, and tell me it was shooting fish in a barrel. There is chalk and cheese between the other guys out there and what we can produce on that end as well. And you say shooting fish in a barrel in COVID. They were about 3 or 4 months apart. He paid $317, came with us $280,000. If anything, I'll put Nick Wilcox on the speakerphone right now. Our property was better than his property. Then that property that he bought there, the one at 280, was a better deal. So no, mate, I don't care what you say, all that bullshit. It's a load of shit. There is chalk and cheese. Because when the going's easy in those times and someone's stacked and they take the easy option and produce the shit deals and they don't take the care around it as well, in my opinion, I've never actually said this to Nick, I think he overpaid a little bit for that property. I think it was a 310, 315 deal and he's paid 317 plus a BA fee. We've bought the same property at 280, better property at 280,000. That was in COVID when supposedly you're shooting fish in a barrel. It is not.
See, you've
best burley of the day, mate. Best burley of the day.
Just witnessed it firsthand, Lukey, because I did say to Savvy, but he didn't listen to it. Hypothetically, someone may be thinking this, but I thought, you got to put your body on the line.
But this was a big company. This is someone that people trust and they think is a big name and is a good name. It's the same as, it's not the same, but it's a similar company that I got burnt by. Big names. Like, you think it's funny, but it's not funny because I got burnt by it. And I've seen a lot of people get burnt by it. It's a load of shit. And this is the thing, man. Like, just because someone's got a big name or they've got a reputation or whatever, have a good look at it, man. Like, it's honestly, you got to be very, very careful. And I know, man, I love our Scouting Australia podcast audience and I love Australian Property Scout because a lot of the people relate with me and the people that hear me getting fired up here. I know everyone, thinks it's a laugh and all the rest of it, but I'm passionate about it because I got burnt by it and I've seen that many people get burnt by it. And people come to me and they've shown a property they bought with someone else. I'm just going, fucking hell, mate, are you kidding me? And the market doing what it did during that period. This is probably going to your question, I guess answering what your question was about that. The market hid how shit most of those deals were because for the first 12 months it did nothing and then all of a sudden there was that stock shortage and then it went crazy.
Like your 317 went to 400 so it looked really, really 100%. Well, but your 280 to 400 is much better.
Exactly. But it's just like it's the thing is when you put it all into perspective, it's just like, yeah, okay, the rising tide lifted all boats in those scenarios. But even when you look at it on paper, Nick, if he had done one more deal at that was his capital utilized. That was it. If he'd done, actually, he came to me with 100,000. If he'd just done 2 more of that deal, he was done. But instead, we bought at at the 280. We bought a couple at the 280, a couple of 290 sort of thing. He stripped all his capital back out and he kept rolling because of that. So his portfolio built to the size it did because of what we did with him during that time when the market was dead. During that 12 months where the market was dead, we really, really scaled his portfolio in that time and in that time period. And if he had just continued buying those shit ones that there was no equity in, and the journey's done. Yeah, the journey's done.
Sometimes you got to get in the shark cage to get the best view, Lukey, and you've just had first eye witness of it. But I'm glad you said that, Sammy, and you'll thank me for that, because if you're listening to this, folks, and you just heard the bull shark on pretty close to full throttle.
Bro, I was moving closer to you. You see me doing this.
Because I think this should be a wake-up call, because if you're thinking, you know what, I'm going to do it on my own, and go for it. But you're competing against the bull shark in the arena, and that's what you're up against, Lukey. When you got to think about it, if you're going to be there backing yourself, and for those people that are out there thinking, you know what, I want to use this buyer's agent and so forth. This is the passion that you're competing with against, and I know you're really passionate, and I love it. I love getting you fired up because it shows how much you really care. And I've been burnt from a buyer's agent before, so that's why I want the listeners to hear that, because that is the difference between just ticking the box, getting a fee, and actually genuinely caring about someone's actual bloody life.
Yeah, 100%, man. 100%. I'm with you, boys.
So I think anything else?
Mate, I'm good. We're 45. We said this will probably be a 20, 25 minute ep, mate. We've doubled it.
Well, you're doing laps, the circle laps around the canals of Queensland.
The Brisbane River.
Swimming in the shallows, just eating a few BA legs as I go.
Do you know how many people on the Discovery calls always say, are you throwing out any burley for the bull shark? It's like the slogan.
You always get, what do you always get?
Every time I'm on the strategies, I talk to people all the time. They're like, Sam could be a bit nicer to Jimmy, hey? And I was like, nah. I was like, nah, he deserves it. And do you know, some of the other...
You missed that for a second.
Someone the other...
He's a dog. There's a reason he's called a silver dog.
I thought we were mates.
Someone said to me, you fucking ate you.
Someone said to me the other day, no, I really think that he should take it easier on Jimmy. I said, don't feel sorry for Jimmy. He gives it out just as good as he gets it. So
that guy can unsubscribe.
I like it. I'm a big game fisherman, so I like it. I like going out there for the bull shark. But no, that was awesome. What a way to finish off the podcast, because I think that was very helpful. And that segues perfectly into
next week's. Yes, 100%.
Give us a little teaser again for the people.
We're jumping into everything about off-market deals. So obviously, we're going to have, we're having Jace Morgs is on the show as well, coming in, talking about two of the senior BAs at Australian Property Scout. And we're just going to be pretty much diving into and dissecting all the pros and cons of off-market deals and essentially just the full backstory around them. Because a lot of the time we get asked, why would someone sell off-market? You know, thinking it's a Houdini sort of, Fugazi sort of thing going on. But yeah, man, it's sorry, mate, don't have your background, but anyway, man. So I think that'll be good to dive into and to knock over as well. So, mate, awesome. I'm looking forward to it. Any final points, boys?
Anything, Lukey?
All good.
It
was good.
Beautiful. I think that was great.
Boys, thank you very much for jumping on once again. Lukey, trip down from the north. Jimmy, trip up from Mordor.
Mate, I love it.
You got a few singes on your face.
Yeah, what's the sun? I'm not used to it. I'm melting.
It's not the lava getting you on the way through as they're flying the plane out. Anyway, listeners, thank you once again for tuning in. We appreciate it as always. If you took some great value out of the app, please jump on and give us a 5-star review if you haven't done it yet. If you took some great value out of the episode as well and you think there might be someone out there that has, maybe you've been talking to someone about it, or someone might take some value out of understanding or learning about stock levels and why stock is currently so tight, and a little bit of burley getting thrown around and a few sharp responses being thrown there, be sure to send it on. Share the love. Keep building the circle of influence. But otherwise, guys, until next week, another Scouting Australia podcast. Thank you once again, boys, and I'll see you all next week.